choose your own adventure. What that means is, in a lot of situations, there could be multiple ways to take advantage of a singular idea. And probably nothing right now is more popular than the way in which traders are looking at the S&P. Now, there's really a number of ways to look at the S&P. My preferred way is the S&P futures. There's also the micro S&P, MES. There is the SPY. And of course, the extremely popular SPX. Now remember, all of these are simply trading the S&P. The implications might be different, but all of them are simply trading the S&P. The way that I like to look at the S&P, though, is through the one symbol that becomes a touchstone. So choose your own adventure means if you're looking at the S&P futures, the ES futures contract, and you look at something that's actually trading 23 hours a day. This is trading 23 hours a day. So you get a nice rolling start into the 9:30 bell with your indicators already having volume, volatility, and price to work with, rather than at the bell, your indicators starting to crunch data. So that's one advantage to using the ES to trade MES, SPY, or SPX. The next thing we want to look at are the hourly price movement ranges. So you'll see I have the support of the hourly price movement range here. And we also have the resistance. Now, if ES reaches these levels, that's also resistance for SPY. That's also resistance for SPX. Right? Same thing goes with the support. And for a lot of traders, they like to set up SPX. So let me tell you a couple things that I have found have helped. Those really big days when SPX tends to be moving with a lot more volatility, when the VIX futures are north of about 14.5, we tend to get a lot more volatility. And of course, when the VIX is up, you also have more implied volatility, which means if you're selling the premium, you're collecting more money. Okay, so those are things that I've noticed. The other thing that I've noted is that my preferred window for entry, there is an entry window when you're looking at 0 days to options, and that would apply to not just SPX, but there's 0 days on SPY. I find that if I can take advantage of the London fix right around 11 a.m. and really anywhere between 11 a.m. and about noon, if I can get my trades in at that window, before that window closes, I should say, I will have a better chance at follow through. So then as we're approaching 11 o'clock, you ask yourself, all right, where are we? And today was less than ideal because we were kind of flirting with the previous session close and we're below it. But the only thing you can do with the ES futures, therefore SPY and SPX, is get long in this area or nothing, right? It's either long or nothing. It shouldn't be long or short. It should be long or nothing, or short or nothing, right? So in this case, you're doing what? You could look at SPY calls, SPX calls, or you can sell premium on puts. Or of course, buy the ES or the MES. Now, what you're really looking for follow through, it's almost like rungs on a ladder. You want to get through some key levels. And not in any particular order, but the key levels would be you want to get above the anchored VWAP. I like to use 7 a.m. Then I have this, and you can see this right through here. There's a zone that's highlighted right through here. There's a pre-market level that's marked on all my charts, this pre-market level right in here. The next thing is to get through that pre-market level. And we call it endearingly the pre-market Pingala, after the mathematician, right? And ideally, as those things are happening, you see green candles and even ultimately a green trend. So it's really one test after the other. We don't know here that it's going to continue to rally. It's just an entry zone. Then as it's able to take out each one of these levels, and I know there's a lot of, I feel like I'm channeling my inner John Madden here, there's a higher probability of follow through as you take out each one of those levels. And then the last one, which came really later, is the previous session close. These are all lines in the sand, gang. And a line in the sand is just to say, where's the sentiment? Is it bullish or bearish? And as we take out each one of these are sentiment levels. There's other sentiment levels you can look at. It could be the clearing range. It could be the initial balance, which both of those were happening as price action took out, let's see. So your initial balance level would have been the high at about 52.98. Your clearing range would have been as we take out 52.88.5. When you have these basic levels, all of which are either really easy to determine with time and price, or with some very simple indicators, or using things like hourly price movement ranges and this pre-market Pingala, you can see that even when price sold off, look at this. Even when price sold off, look at where it bounced. Right in that pre-market Pingala level. Okay, so I get a lot of questions about S&P trading, and I thought, you know what, let me just throw some ideas out there in terms of whether you're trading S&P futures, mini, micro, the SPY zero dated, or the SPX zero dated. Again, it's just choose your own adventure, but you can look at the S&P, which trades 23 hours a day, to get a better idea of what to do. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.